Hello, today is the 27th of August, and it's time for the market review or preview, whatever. It's Tuesday, so it's a bit of reflection on the info that we got on Monday, and it's also a nice point to have a bit of projection of what to expect for the rest of the week. So it's important also to begin observations with the prequel, with the picture that was drawn out by the indices and by stocks in general in during the previous 2 weeks, and namely it was a V-shaped recovery, and it was as V-shaped as it gets. As it gets. I'm sorry. Uh, Actually, it reminds me a bit of the post-COVID recovery. So what it means is basically that every each other day, the index names, the Googles, the Amazons, the Teslas, and of course the Nvidias of this world were systematically accumulated. And I think that when names like this grow in this fashion, that means that somebody is buying the indices, not the individual names. And this also means that there is not enough liquidity to support movements of individual names, the mid caps, the small caps, all around the market. And that was the theme, because maybe until the second part of the previous week, there was nothing, absolutely nothing to do at the level of individual stocks beyond the aforementioned index names. The situation was changing a bit, so there were a couple of successful trades, very successful. Maybe I wouldn't call it a successful trade yet, but there was and still is a number of consolidations which could be resolved by upside movements. But yesterday, Monday, was not very conducive to such movements, and I will show you why in a moment. But before that, it's important to take a look at the percent of stocks above the 50-day moving average. The stocks which formally comply to one of the most important rules, namely being in the ascending midterm trend, which of course is only possible most of the times possible when the stock is above the 50-day. So yesterday we got a bit of overshooting, and for a brief moment percentage of such stocks was reaching the level of 70%, which is good. But that was a bit of it wasn't driven by smart money. It wasn't driven by smart money, and actually there was some distribution yesterday on Monday. So automatically that signals that we are not in the full scale all-out rally yet, and it's absolutely okay when we keep in mind the prequel, namely the V-shaped recovery. So personally, I think that this week is going to be spent consolidating, and I also think that all that could be said was said. I mean, we saw the inflation numbers, we saw Fed projections, we listened to Jerome Powell's speech, and now it's up to the market to decide what to do with this. And solely from the standpoint of physics, we need some more time to create new configuration of buyers and sellers, of those who was bottom fishing and of those who are willing to allow these bottom fishers to take their profits and provide liquidity for that. And what we need to figure out is who are these buyers who are going to support the market right now? Are these other institutions in this market to support it, or it is retail once again who is happy to jump into the market and expect this V-shaped recovery to transition into V-shaped breakout to new highs in the indices and in the Nvidias and so on. Also, we need to take into account that Nvidia is about to release their numbers soon, so that's going to be another variable in this market. So we'll see. If we transition to the charts, we will see that the indices are indeed consolidating. If you take a look at the QQQ, you will see that it indeed was recovering in a V-shaped fashion, and now there is this pennant, maybe wedge, I don't know how to call it, and the semantics are not that important, but it provides us with a good line of least resistance, which is about to be broken to the upside. And of course it will happen in case Nvidia will be if Nvidia will be able to surprise the market once again. In other indices, the situation is a bit similar, maybe with the handle or the wedge not that developed, at least in DIA. And in SPY, we also seem to be quite ready actually to go further to the upside. Maybe a bit of a shakeout here could be quite productive, but nevertheless looks quite ready. And on IWM and MDY, we see that during this move, they are not lagging behind like it was for months and years before the recent time, which is very good for the broad market. And actually this supports the case for a broad rally a bit later in the year very well. Another thing to keep in mind is that the DXY is collapsing, which is good. That seems that Fed is indeed about to cut the rate. So not even a discussion anymore, and it's good that it's being confirmed by the lack of strength in the greenback. Okay, so now to a bit more practical stuff. We are seeing that BTC is retesting this congestion of moving averages. The 20-day is still trending to the upside, so potentially this as a retest of the previous wedge pop, if we are to use Olivier Cal's terminology. This could be viable if it will prove its readiness to hold this area and go back up to finish the consolidation in the upper side, because there are lots of buyers here, the euphoric buyers who are still willing to part their way with the coin, So these guys are actually in charge now, and we need to see if there is a demand here which could support for the strength and provide the necessary demand to push this battle a bit higher, above 65,000. But looking constructive so far. Of course, a decisive break to the downside would be negative, but we'll see. A bit too early to speak, but a definite point to take a look on. At the level of individual stocks, we will see basically what I have described earlier. This one was literally the first to break out in this small wave. It broke out far from perfect, basically gapping up above this line, then tested it and broke out again, and is behaving quite well, basically up until this moment. One of the rare names which did it, with exception of some pharmas. And of course, as always, my watch list is skewed to the growth side, but some of the names are the rare ones which are growing, but the theme in which it's a bit hard to pick the ones who are the strongest. This theme is very well defined. For example, DNTH is a bit like this, tried to break out yesterday, actually was quite strong, while the market was weak, and retreating today. This is not the relevant theme. eBay was one of the two which I found at the beginning of this mini movement with ATMU, and it broke out successfully. And right now, actually, there are no abundance of names which provide good buy points. For example, NRIX is testing its buy point today. This one I was watching for a long time already. PTGX, one of the first candidates with a well-defined buy point here, still holding on. And this actually, I watch this one daily with aiming to buy it as it moves through this line around 42.32. QTTB looks a bit similar. This one is a thematic stock. RKT never provided a well-defined buy point. Maybe you could buy it here. Should definitely familiarize myself with this type of aggressive setups, but not buyable right now, that's for sure. What else? Surf Robotics, Sprouts Farmer Markets. Actually, this one is quite strong too. SLNO. I'm seeing a bit more weakness in the field of pharma, and it could be pointing that the movement of the sector as a whole is about to pause a bit. This one I like too, but Spotify is a large name, and I think it tried to break out, retreated, and now it could be viable again as it emerges from this. I don't know how to name this pattern, but basically it could be a bounce off the 20-day EMA. with a very nice risk management, around 3%. What else? What else? Basically, some names are moving, but once again, it's not that easy to pick up those who are to make the sustainable move, and there were too few of these moves to mandate good level of exposition to this market. Our VMD is one of the names which is quite illustrative of this market. Breakout, breakdown, not a total disintegration, but no strength so far. So yeah, basically right now the theme is wait and see, and will this market be able to consolidate this movement, or are we about to witness a bit of a further shaking, and it could take a bit more than 1 week. I think it's good to finalize this communication with this example. One of the best setups in this market. A long consolidation with a nice shakeout. Was one of the first to recover and approach new highs. And what did we see yesterday? An attempt which was immediately met with distribution. So when these consolidations don't work that well, all the rest is quite susceptible to shakeouts. This is another one, but it's an earnings play. So no definite progress in this market so far, but we could be really close to a more productive environment. With that being said, I think it's safe to conclude our conversation. Let's be in touch.